Hello and welcome to Business Incorporated. I am Bisi Adebayo. On today's show, global stock markets rebound after a string of losses. But South Africa's president calls for compromise on budget goals. And Egypt issues new rules on buying treasury stocks in a bid to support the market. Well, let's begin the show quickly with markets in Africa, which were mostly positive at intraday, except here in Nigeria, where the NSE had shed 0.41%. In South Africa, the JSE index gained 2.03%, and in Egypt, the index added 1.84%, while the market in Kenya closed negative on Friday. Meanwhile, most major Gulf stock markets steadied today after sharp losses in the previous session on rising expectations of a coordinated global monetary response to help soften the economic blow of the coronavirus outbreak. Dubai's main share index, which had tumbled 4.5% on Sunday, was up 2.54%, while Abu Dhabi's index added 1.7%, and that was driven by a 2% gain in First Abu Dhabi Bank. Saudi Arabia's benchmark index rose 2.24% at intraday, with Al Rajhi Bank gaining 2.4% and petrochemical maker Saudi Basic Industries increasing 3.8%. Only Qatar's index shed 2.89%. And in Europe, markets traded sharply higher this morning as investor sentiment was boosted by promises of a coordinated global monetary policy response to mitigate the economic impact of the coronavirus outbreak. Let's bring in Orit Batts, my colleague at the Frankfurt Stock Exchange, who's standing by to tell us more from the European scene. It's good to see you, Orit. Good afternoon.
Hi. Good afternoon to you.
So last week was the worst for markets since the financial crisis following the collapse of Lehman. What does that look like at the moment in the European markets?
Well, it was a good start, as you mentioned, but the share price gains have melted away basically across the board. Where you look at the big board behind me here in Germany, the DAX, it started off about 1.5% better, and then now it's about 1.5% below Friday's level, and pretty well the same picture in the rest of Europe. London, for example, minus 1.2% after a good start. Paris, also a good start now, minus 1.7%. And worst affected, Italy, with also the most corona cases in Europe so far. So the market there is also losing 3.6%. And it didn't get off to a good start in contrast to the other stock markets either. I think people are just realizing that corona is not going to go away anytime soon. Still, having said that, this day is markedly different than any of the 5 days previously, where there were huge losses, especially on Friday. So people weren't calling even the good start a recovery. They were calling it a stop in the slide, in the sell-off. And now the confidence has waned again, perhaps also fueled the uncertainty by statements from the likes of the OECD, a respected institution, projecting that world economic growth could have from about 3% to just 1.5% this year. And also the Bank for International Settlements, also a very respected economic policy maker and player, saying that the likely effects of corona would be worse than previously assumed.
Now, lots of talk about possible support by central banks or fiscal stimulus. What are you hearing in Europe, and would it help in any way?
Well, we're hearing that it's almost certain that the Fed reacts, perhaps as early as this Wednesday in a coordinated action. Others say the Fed has until 17th, 18th March, its scheduled meeting to lower interest rates, and pretty well across the board people are certain that it will do this. Fed Chairman Jerome Powell has already indicated that the Fed is ready to step in if needed. The ECB doesn't have as much room to lower rates as the Fed, practically none. On the lending side, on the parking money side of the banks, yes, it can lower the negative interest rates there further, and people do expect it to do so, perhaps at its April meeting. Whether this has much effect on alleviating the situation, I don't know. Central bank action can do much to address demand deficiencies, deflation, for example, but in this case, it's a supply problem. I don't know if really that will get consumers or companies to buy more because they're waiting for product to buy.
Now, just before you go, Orange, would like you to give us an insight into the situation on the coronavirus where you are.
Well, we have in the state of Hessen here, we had the number was 2 infected. Frankfurt is in the state of Hessen on Saturday, and now the number from this morning is 10. So it's a very small number. There's scattered cases across Germany. It's not an outbreak yet, but one very renowned virologist from Berlin said he expects 60 to 70% of Germans to become infected at some point within the next 2 years, and it to become a problem if that number of people infected happens in a sharper, closer, more limited period of time. I was shopping on the weekend, Saturday, Sunday stores are closed, and I wanted to pick up some pasta and some tomato sauce, and pretty well the shelves were bare because of people stacking up, fearing quarantines here as well.
Well, we do hope that things get better in the coming days. Many thanks, Orange, and we'll see you again tomorrow.
Thank you.
And London's FTSE 100 index soared almost 3% in early trade, and that was boosted by hopes of united support from major central banks to ease the impacts of the coronavirus. Well, let's get the intraday updates from Juliana Olayinka from our London studios. Good afternoon, Juliana. Bring us up to speed with intraday numbers. What plans the Bank of England is putting in place in response to questions about the possible action over the impact of the COVID-19?
Good afternoon, Bissy. Well, the FTSE has lost some of its early gains, but the most important thing is that it's out of the red at intraday. The all-share is up 0.90%. The FTSE 100 is up 0.94%, and the FTSE 250 is up 0.44%. In currencies, the pound is down on the dollar by 0.32%, down on the euro by 0.83%, and down on the Japanese yen by 0.54%. As you said, it seems as if there's a general consensus across the globe that central banks will be loosening their fiscal policy to try and curb the impact of COVID-19. And that's exactly what the Bank of England will be trying to do. At early trading, there were some suggestions that it was 50% of a likelihood that the MPC will cut interest rates when they next meet on the 26th of March. But now that's gone up to almost 100%. They released a statement earlier today saying they would potentially be interested in cutting rates, depending on how things go over the next couple of days. So there are some suggestions that that will be cut from 0.75 as it stands to about 0.50. And we also know that the outgoing Bank of England Governor Mark Carney, just before he goes, may be chairing an emergency meeting with Monetary Policy Committee members on Thursday or Friday, just to try and resolve the situation before his successor begins.
And let's talk about the latest PMI data now, which shows that UK manufacturing output accelerated to a 10-month high in February. But there are signs that the coronavirus is starting to hit company supply lines. Tell us more about this.
Yeah, well, the UK PMI manufacturing data came in at 51.7. It was 50 in January. So that's quite a huge leap, especially considering that 50 is the indication. Anything above 50 indicates that there's growth in the sector and it's becoming healthy. But some analysts say the manufacturing sector is still really recovering. A lot of the gains seem to be taking place more so in the domestic market. Business optimism, of course, has grown since we finally decided to leave Europe, and Boris Johnson's got an overwhelming majority. A lot of businesses seem to be happy with that victory. So they were hiring again, they were purchasing again, they were purchasing a new product launches, which was good for manufacturing. But of course, can't talk about manufacturing in the UK, not talk about COVID-19. It is really hitting home. And even though the indications are that in February there seems to be a slight growth, there are fears and concerns that once the numbers come in March, there could be a dip again. It's becoming a lot more difficult for people to get their supplies, of course, across from China. And there seems to be a heavily reliance upon that. And Boris Johnson and the rest of his cabinet government, including the new Chancellor of the Exchequer, are trying to work out how they can do that before they announce the spring budget in March.
coronavirus. Now, the number of UK cases have jumped to 36, and Boris Johnson is to chair a meeting of the Government Emergency Cover Committee later to map out plans on how to tackle the situation. What are the expectations from that meeting?
Well, the meeting is actually wrapped. Yes, Prime Minister Boris Johnson was speaking to several key figures, not only his cabinet members, but all four countries within the United Kingdom, because we've seen the coronavirus there. Also, as well, the London Mayor Sadiq Khan was there, because just earlier today it was confirmed that one of the 13 cases which were recorded yesterday is a teacher who was teaching in Wimbledon, which is just the southwest of London. She had just come back from Italy, and she has the virus. So there are lots of concerns. Prime Minister Boris Johnson was just speaking before I came into the studio, and they said they are expecting to see an increase over the next couple of days, and an official statement will be released tomorrow. There are lots of rumours and suggestions about what may happen if these draconian powers or these emergency powers will come into effect. We know that in France, which is obviously just a stone's throw away from Britain, they have already stopped any gatherings of any indoor gatherings of over 5,000 people and above. The Louvre Museum, which is the most visited museum in the world, that's been closed. And we're expecting that there could potentially be some sort of similar incidents taking place here in the UK. We know that some schools are already closed. 11,000 people have been tested, and there could be mandatory infections. But, you know, the fact what's becoming more worrying, Bissy, is the fact that this second case is happening in London, because anybody who's travelled in London or seen the pictures here knows that it can get extremely congested in the underground. And of course, if it's a teacher that's infected, that's lots of children that could be taking the virus home.
I guess safety just remains the key word here. Let's all stay safe, Juliana. We'll see you again later. And major markets in Asia attempted to bounce back today after sharp losses last week, even though China's manufacturing data released today came in much worse than expected. Mainland Chinese stocks surged the day, with the Shanghai Composite 3.15% higher, while the Shenzhen Composite gained 3.76% to approximately 1,869.65. Hong Kong's Hang Seng Index also advanced 0.75% as at the final hour of trading. Elsewhere, the Nikkei 225 in Japan recovered from an earlier slip to rise 0.95%. South Korea's Kospi gained 0.78%, closing at 2002.51, while stocks in Australia, however, continued to decline on Monday, with the ASX 200 down 0.77%. Overall, the MSCI Asia ex-Japan Index was 1.06% higher. And in the U.S., stock futures recovered from an earlier tumble on Sunday night as investors shrugged off concerns around the coronavirus outbreak. Earlier on, we saw the Dow Jones Industrial Average futures up 510 points, pointing to an opening gain of 471.64, while futures on the S&P 500 and the Nasdaq also pointed to gains at the open for the two indexes. The Dow, the S&P 500 and Nasdaq Composite all fell more than 10% last week, and that was their biggest weekly declines since October 2008. Well, let's check out the prices of crude oil now. They actually rebounded today as hopes of a deeper cut in output by OPEC and stimulus from central banks countered worries about damage to the demand from the coronavirus outbreak. Brent crude was at $51.31 a barrel, up 3.3%, while U.S. West crude recovered to $46.11 a barrel, up 3%, and both marks their first gain after 6 sessions of losses amid virus worries. And gold prices also rose more than 1% today, recouping losses from a steep slide in the previous session amid the fast-spreading coronavirus and hopes for a rate cut by the U.S. Fed. Spot gold gained 0.9% to $1,599.15 an ounce, and U.S. gold futures rose 2.2% to $1,601.20 an ounce. Other metals also regained some ground following Friday's free fall, with palladium rising 1.7% to $2,638.21 an ounce, and platinum gained 1.6% to $877.52, while silver rose 1.8% to $16.95. When we return in just a moment, we'll take a look at South Africa's 2020 budget. Do you stay with us?